You know that feeling, right? You enter a trade and bam, it immediately goes against you. Well, what if you could pinpoint the exact turning point in the market? Today, we are going to break down a trading model designed to do exactly that, to help you get those incredible sniper entries using a clear, repeatable four-candle pattern. Catching the absolute top or the absolute bottom of a move, that's kind of the holy grail for a lot of traders, isn't it? And that's exactly what this model aims for. This quote from the source material really says it all. The goal is pitch-perfect sniper entries. Now, I know that sounds almost too good to be true, but we're about to walk through the exact mechanical steps that can make it a reality. So, what's the secret sauce behind these ridiculously precise entries? Well, it's not some crazy complex indicator or some piece of expensive software. It's actually a really simple, almost elegant, four-candle pattern. And trust me, once you learn how to see it, you're going to start spotting these opportunities setting up all over your charts. Okay, so the entire strategy really hinges on one single concept, the liquidity block. What is it? Well, it's formed when one candle, let's call it candle 2, spikes below a recent low. Think of it like a liquidity grab or stop hunt. It's basically designed to trip all the stop-loss orders sitting there. And when that happens, it creates this super powerful reversal zone, which is the foundation for this whole entry model. So here it is, the four-step sequence for a buy setup. It's super straightforward. First, candle 1 just sets a low. Then candle 2 comes in and aggressively spikes below that low. That's what creates our liquidity block. But then it pulls back and closes higher, showing rejection. Next up, candle 3 forms a higher low, which is a little signal that maybe, just maybe, the sellers are running out of gas. And finally, candle 4, this is the one. It gives us our entry trigger when it just briefly dips below candle 3's low. That's it. That's our green light to get in.
Okay, so you can spot the pattern. Awesome. But knowing what it looks like and knowing how to trade it are two different things, right? That's where our rules of engagement come in. These are the simple, totally non-negotiable rules for actually executing the trade. And, just as important, managing your risk.
Look, there are only two rules you have to burn into your brain. That's it. First, the entry rule. You go long, you enter a buy, the instant that the price breaks the low of candle 3. Second, the stop-loss rule. Your stop-loss goes just a little bit below the low of candle 2, right below our liquidity block. It's a purely mechanical entry, and your risk is crystal clear from the get-go. No guesswork. Now, here's what makes this model so powerful. It's fractal. What does that mean? It means the exact same four-candle pattern works on any time frame you can think of, from the daily chart all the way down to a 1-minute chart. So let's jump in and look at some real-world examples so you can see how this thing plays out. All right, let's start with the big picture, a daily chart. You can see it clear as day. Right here, candle 1 sets the low. Then candle 2 spikes down below it, creating our liquidity block. Candle 3 confirms the weakness on the sell side with a higher low. And then boom, right there is our entry trigger. The next candle dips just below candle 3's low before the price just absolutely takes off. It's a textbook example in a higher time frame. Now let's drop down to a 4-hour chart. And what do you know? It's the same exact pattern. Price sweeps the lows, candle 3 puts in that higher low, and then we get our entry trigger. The result is just a beautiful, precise entry right before a really strong move to the upside. You can see how reliable the pattern is here too. And for all you intraday traders watching, check this out on the 15-minute chart. After a sell-off, the four-candle setup forms perfectly. Look at the precision of this entry. The wick perfectly tags the low of candle 3, and then the market just rockets higher. This is how you can use this model to catch the very, very bottom of a short-term move. It's amazing. And of course, this isn't just for buying. The same logic works perfectly for selling. You just flip it on its head. Candle 2 spikes a high. That creates your liquidity block. Candle 3 then forms a lower high. Your entry is to go short the moment the next candle spikes above the high of candle 3, and your stop loss just above the high of candle 2. As you can see right here, this can lead to a very, very sharp drop. Okay, so you get the theory, you've seen a bunch of examples. Now it's time to actually put this into practice. Let's go over a simple toolkit that's going to help you start applying this model to your own trading right now. Now listen, this is probably the most critical point of all. These pitch-perfect entries, they don't happen every single day. And the temptation is going to be to start seeing this pattern everywhere, even when it's not really there. But the real skill here isn't just recognizing the setup. It's having the ironclad discipline to wait for all the rules to be met before you even think about putting your money on the line. So to help you stay disciplined, here is a dead simple checklist. Just follow these 4 steps. 1. Identify the liquidity block created by candle 2. 2. Mark your trigger level. That's the low or high of candle 3. 3. Patiently wait for the price to spike past that level, and then, and only then, step 4, execute the trade with your stop loss already in place. Follow these 4 steps every single time. All right, here's your mission, should you choose to accept it. You need to become a pattern recognition machine. Go back through your charts, daily, 4-hour, whatever you trade, and find as many examples of this setup as you possibly can. The more you see it, the more it becomes second nature, and the more confidence you'll have to pull the trigger when a real opportunity pops up.
So, we've given you the complete blueprint. The pattern is simple, the rules are crystal clear. But the ultimate key to making this work isn't on the charts at all. It's right between your ears. So the question you really have to ask yourself is this. You've seen the pattern, but do you have the discipline to actually wait for it?